Hi crypto enthusiasts, it's Mirela Ciobanu, lead editor with The Papers, and we are live at Money20, where I'm about to speak with Ran Goldi, SVP of Payments and Network at Fireblocks. He is going to share everything about their latest survey on stablecoin, and he's also going to offer valuable insights on how to build a stablecoin strategy. Fireblocks is working with over 300 payment companies globally for PSPs that are just starting exploring blockchain-based payments. What piece of advice you would give to them?
First of all, don't believe the hype, right? If you go on LinkedIn today, it seems like stablecoins maybe can cure cancer, right? That's not the right thing, right? Stablecoins are another payments rail. It's an infrastructure upgrade to whatever it is we have today. Sometimes you should use PIX, sometimes you should use SPAY in Mexico, sometimes you should use stablecoins. That's the first thing to know. Stablecoins is not 0 or 1. Number two is you need to start this journey somehow into adopting this new rail. You really have to, because it's getting commoditized very quickly. And if you don't get, your compliance, your risk, your merchant products around stablecoins, you're going to miss on more revenue opportunities because your clients are slowly going there. So start your journey, even if it means starting crypto remote. Don't touch the asset. Work with companies like Bridge, like Zero Hash. Work with them. Slowly bring the infrastructure inside. Might take you a year or two, but start that journey from crypto remote to crypto inside.
Since you're mentioning about crypto inside, I have this feeling that, you started with people crypto remote, but you are also working with crypto inside. And if you are to observe some of their characteristics, what do these champion companies in crypto space have in common?
So it's funny you say, because we used to look for the anarchist in the house. We used to look for, who's crazy enough in this big company that would want to adopt this new technology? Now, I feel like since we had all these watershed moments from Stripe buying Bridge, and obviously the Genius Act in the US, MiCA regulation, I feel this is coming from the board, it's coming from the CEO, right? What I think is really, I would say common for all of them, is these are companies that their business is the margins on the money movement. And they understand that stable coins, and again, they're not cheaper, right? Don't believe that hype, they're faster. And when money is faster, you can turn that around more. You can have more of that margin. That, I think, is what's driving that. That's what I think is in common for all those companies. They move money, a lot of money quickly, and they want to move it faster.
Now, to return to what do these companies have in common, and to take away this idea of feeling, Fireblocks also did a survey. So we also have data to back what you are saying. Can you share some of the findings of your survey?
Yeah, of course. I think the most interesting finding that honestly I was shocked about is that 90% of the 300 financial institutions and payment companies we surveyed, 90% of them are already doing something. Something could be strategizing, something could be POC, something could be already deploying solutions, but 90% of 300 financial institutions are doing, right? The second stat that I was really happy to see is that the concern about regulations is only 18% right now. And we did the same survey 2 years ago. Concern was 84%, right? So that really dropped. The last thing I think is that when we asked them, why are you doing this, right? So 65% of companies said that they're doing this for revenue generation opportunities. That could mean clients' demand, that could mean expanding to new territories. It's really about revenue generating. It's really about client demand. It's not about, a government told us we need to do this, or it's hyped or whatever. It's coming from the grassroots. That's what I love about this.
Okay, so you mentioned the whys are the revenue generating opportunities, but now I'm curious to see what are some lesser known advantages stablecoin offer, especially if you think about B2B payments.
Well, I think what we still haven't unlocked really is the programmability of stablecoins. We're now treating stablecoins just as another, another currency, another FX pair maybe you could do between, a Mexican peso and a dollar-based stablecoin, and that's fine for now. I'm happy that this is what everyone is getting accustomed to. But in the future, we can actually program that currency, right? We can say, only move my dollars to Mexican pesos if the rate is underneath that specific rate, right? That's just one example. I think
Yeah.
that is the advantages that we'll see unlocking within 2 years, 3 years from now.
Yeah. Okay, so you presented the advantages, the states. Now, what's stopping? I mean, if I were a financial institution and I want to build a robust digital asset strategy, what should be top on my agenda? What should I do to be there?
So the first thing is just start walking this path, baby steps, because we know who's stopping this in an organization. And I say stopping like it's a bad word.
Yeah.
We know who needs to learn more: compliance, risk, and treasury. If we don't get these people comfortable with what is this rail? Can you really trust a wallet address? Is it a known user, not a known user? There are a lot of answers to this, but there's also a lot of misconceptions. It's almost like we are our worst enemy right now because we are flooding this industry with so much noise, right?
Yeah.
I think that if you want to take the first baby steps, just start a POC and let your compliance people learn how they screen wallets. Let your risk people learn how they can actually value the risk of a transfer of USDC from one country to another. That's easy as that.
Yeah. And now, since we are here at Money 2020, I think you also had a panel, a talk. Can you share a bit about, what your highlights were?
It's my best Money 2020 ever. This year, stablecoin payments is, everyone wants to talk about it, everyone wants to do it. And the panel, by the way, that we did was every company needs a stablecoin strategy. Exactly like you said. So on the panel, we had remote.com, one of the largest marketplaces for developers and other type of gig economy employees. He was talking about how 1% now is actually receiving their payouts in this. And he felt bad that he's only saying 1%. I think it's huge, right? And then we had Stripe over there saying how that's growing twice. Like merchants who use stablecoins are growing twice as fast than merchants who are not using stablecoins. And for me, the major takeaway is, these people who are building on top of Fireblocks, we need to make sure that this is all transparent for them. Like that guy from Remote, their CEO, he doesn't want people to understand it's a stable coin, for example, or a dollar. I want people not to think if they need to choose USDC or USDT. I want them to understand that it's all interoperable. Just use these rails. They are faster. Take advantage of that.